how I trade against retail traders. Good morning, it's Saturday and welcome to Saturday's video. So I'm going to take the euro as an example today, but you can do this on any market really. So I've done it a bit on even on Bitcoin, because any market where the market gets emotional at times that you can do this. Now, it's only when retail traders reach certain sort of extremes, if you will, or they all collectively are up to a very similar thing, that you can do this. So it's not like you can trade against retail all of the time. You can, but it's easier when they're all thinking, or a large majority of them are all thinking the same thing. So, excuse my croaky voice here today. So what we're going to do is we're going to take this euro dollar. I'm just going to give you a simple sort of a couple of different examples from this euro dollar chart. So we'll take what's been going on here recently, for example. So we know that going into, in fact, not right now. Right now is not actually that important, even though the euro dollar's had a nice run down here. Actually, my analysis started to come in on the euro dollar in late December, starting to look for shorts. Now, what was going on back here in late December? This trend line wasn't actually there at that time. I didn't have this trend line in place at that stage, so you can ignore this trend line I've got there. But it had come up into these highs up here. So what am I looking for? Well, what I'm looking for is, and when I say retail traders, you should count the press as retail traders as well. So when you read news stories by journalists or whatever, journalists are not sophisticated traders. So very often when they write a piece, it's because something's been happening already which has alerted them and made it interesting to them. So for example, when the euro had been going up a lot, as we know, last year, so against the dollar, it had a fantastic run like many of the markets had done. But I always use the euro as my base because the euro dollar itself is the most widely traded currency pair, and effectively the euro dollar is an inverted dollar index. Why? Because the euro in that basket of currencies is the largest single currency against the dollar in the dollar index. So that's why that's the case. So what I started doing in December was scouring around, Googling news stories, looking on the dollar. And what I found was numerous news stories, this is for starters, talking about how the dollar going into 2021 was going to continue to fall. And there's a huge amount of news stories around there about that time. So it could be CNBC, Reuters, loads of different, and then obviously newspaper type stories as well, FT and the likes as well. So, like I said, those guys, those reporters are just reporters. They're not sophisticated traders. They're reporters. So they will report on basically what has been happening, and they very often will project forwards into what's going to happen forwards. Outside of that, as far as retail are concerned, and this is an interesting one, over Christmas, so around about I think it was about the 28th of December, Goldman Sachs put a note out saying increasing their projection for euro dollar. Bear in mind, euro dollar was right up near, it was close to these highs. It was up around about 123 at the time. They increased their projection for the euro dollar to 128. Citibank only a couple of days earlier put a projection out at 125. Now, again, you'd say, well, yeah, but they're investment banks, Charlie. Yes, but you have to bear in mind what's their agenda. When they put out sometimes these notes, if they're putting them out widely, which they usually are, they're trying to attract the attention of the masses, because the masses say, oh, Goldman's predicting 128. I better buy. But in fact, Goldman's might be wanting to put that note out for other reasons. Maybe they're selling. So you have to be cautious about what the investment banks are saying as well, because they are very good, especially Goldman's, picking tops and bottoms, and so and very often it's possibly because they have their own agenda. So it was actually on this day, I remember it was this down day here. Oh, maybe that was the 31st, or maybe it was the day before. I don't know. I can't remember, but it was around then, and they're very good at finding the highs. So anyway, so there was a lot going on. But what about the actual retail traders? So then you've got here's a resource here. This is hopefully you can see this okay. This is fxssi.com. You can go to fxssi.com and then you go and get the current ratio, which is what this is. Okay, so go into their tools and then get the current ratio, and this will give you a number of brokers who are, and it shows you what their book is doing. So it tells you whether their book is long or short, effectively. Okay, so as you can see at the moment, now the only thing with this is I think it's always a bit distorted because you've got some what I would call more obscure broker sources in here. So I mean, you've got IG, you've got Saxo Bank, Instaforex, Oanda, Dukas Copy. So there's some good ones in here, and that's FXCM. That's their speculative sentiment index. So yeah, it's interesting, but these are a snapshot. So these only give you a snapshot of what the retail traders are doing. So it's telling us that they are, funny enough, net long at the moment. Look, they're 62% long right now. So it's given us that snapshot that right now they're on average across all of these sources 62% long. So what should we be doing? Well, probably being short. Coming back to that chart, I'll just get rid of this for now. Coming back to that chart now, unfortunately what happens is that when markets go up, as a collective, retail traders go short. When markets go down, as a collective, retail traders get long. Why do they do that? And when I say retail traders, I'm not talking about everybody, because there's plenty of sophisticated retail traders out there. But you've got to remember that there's a huge amount of retail traders out there, and they're not sophisticated. They'll see a market coming down like the euro dollar this past week, and they'll think, oh, it can't go down any further, I'm going to catch the bottom. And they go on gut feel and emotions a lot of the time. And they don't use stop losses and things like that. So that's the thinking behind retail traders. Hedge fund traders are completely the opposite. They'll see a market going down and then think, right, okay, we want to start to ride this trend. So that's the difference. Whereas retail will start getting long, like in this example here, and then they'll get even more long. If the euro carries on going down, they'll take more and more pain. So it's always useful to see what they're doing. Like I said though, that website only gives us a snapshot. So another tool that I use is this, which is FXCM's SSI indicator, but it gives me a longer term view of what they are doing. So I can put this onto an MT4 chart. You'd have to pay for this, unfortunately. You can't get this free unless you have an FXCM account. Then you can get it from fxengineer.com, and I think it's about $99 as a one-off fee. But anyway, so what it does, it just shows you a bar chart of when retail traders are either net long or net short. Okay, so they were net long going into the early part of last year. We got into May, markets, euro dollar started coming up. This is euro dollar chart here. Euro dollar started coming up. They get net short. And unfortunately, because the market was trending, they just carry on getting more and more short. And you'll see what I like about having this chart here is it's not a snapshot like that website. It really gives me a visual of what they're overall doing. Because during this consolidation phase here, they started to trim their shorts, you could see. You're starting to trim their shorts. And then as soon as the market started going higher again, they started to start shorting again because we're in a up phase. And then, of course, you're going to get another round of retail traders thinking, oh, this can't go any further, and they start shorting as well. Plus, the ones who originally short might still be underwater. Many of them will be. So they'll just sit on their trades. And that's what basically happened all through last year. So once they are net short, and if it carries on trending, there'll be plenty of traders who will have come out of their positions, of course, but overall, there's still so many of them who are net short from a long time ago, and you see this, and we're still overall net short even to this day here, because of all those traders who will still be underwater from a month. They'll sit on trades for months and months underwater because they don't use stops, and then they'll just wait and wait until they either blow up their accounts or the market comes back for them. Now, what I find interesting with this is you get a sense of the trend in what they are doing. So as we can see, they sort of peaked out back here in December. They stopped. There wasn't any, I'm not going to say any new shorts, but certainly the maximum amount of retail traders, they peaked in the short back here. So somewhere about here, I guess. So without me looking exactly. So not surprising, market popped up again. And then so why did they not carry on adding at that point? They get to a point where they're going to throw in the towel, and not enough new retail traders are coming in to push the figure to new lows, because probably some of them are blowing up their accounts or throwing in the towel. Now, what you can see, since the euro topped out in December, so we've got another slightly lower low here, or higher low, sorry, here in the number of them, that generally as the euro started coming down, what do you find happens? Oh, the amount of shorts starts to decrease, because what starts happening is it starts coming down, they start getting long. They overall start getting long, so there's not as many net short positions during this phase. And as you can see, it then starts pondering around here as the euro bounced around right away into a week or two ago, and then as the euro's just come down in this last week or so, you can now really get a sense of, oh my word, look, they're starting to come out of those shorts. As you can see on a snapshot window, they're already long, short term. But over the longer term, they're still net short. They're still, because of the amount of accrued short positions. But they are decreasing because they're starting, as the market's coming down, to go net long, and shorts are starting to come out of their shorts saying, oh, thank God for that. I've held onto this short position for 3 months. I can now finally close out at break even. And that's the sort of stuff that will be going on. So this is a really useful tool for me as well, in just getting an overall picture of what they are doing. It's not like, it doesn't give me like a buy or sell, absolute trade signal, but it helps give me a sense of what the larger crowd are up to collectively. Okay, so hopefully that gives you some sort of view there. And certainly, if I take this off now, if you come back to the normal technical chart, so I know that those retail are all starting to get long, and no surprise as the market's coming down. Now, interestingly, what we want to do is couple up with what they're doing with some technicals, of course. So would I just short it on Monday just because retail I can see are 62% long, and overall on my other chart their shorts are being trimmed? No, because technically the euro is into some technical support zones here at the moment, as we've closed on Friday. In fact, I've been short with our traders this past week or so. Anyway, so funnily enough, we banked profits here on Friday, some profits at least anyway. So, but when you see what the retail are doing, when you take on board what the press are saying and the likes, like they were going into December, you can start to formulate a view and combine that with technical analysis as well, and that's when it becomes really, really useful. So for me right now, I can see that retail are getting on the long side as the market's coming down. So I know that okay, there might be some bounces and stuff, but they're generally starting to get on the long side. So so if we were to get any bounces, I'd probably be looking at those again still at the moment as shorting opportunities, because of the way that they go out there and position themselves. And then what will happen? So ideally for me will be that, and it doesn't always happen this way. Like I said, you don't always get to those extremes. But what would be absolutely ideal is that in about 2 months' time, the euro dollar has come down some more. So it's inflicting more pain on more retail traders again, but it comes down some more over the coming months. And then what we start to see is more and more news stories coming out talking about the strength of the dollar and how the dollar's come roaring back and how the dollar's going to do really well this year, because that is exactly what will happen. Just like at the in the latter part of last year, November, December, seeing all these news stories talking about the demise of the dollar, we'll start seeing all these news stories about that. So those will start to come through if we see a little bit more dollar strength coming through, because that's what we're seeing here: euro dollar coming down, which is dollar strength. So ideally, if we wanted to get to that point again, a bit like we had in December, where there might be a nice bounce, an up move, well, I would want to see more pain from the retail traders, and start seeing those sorts of news stories again, and all sorts of chatter on Twitter and the likes. Take all that on board and use it to your advantage. I do hope that helps you today, gives you a bit of an overview of the sorts of things that I use for gauging sentiment in the markets. Do give us a thumbs up if you like our videos, and always and do subscribe as well, and you'll always get notifications when any of our videos come out. Take care for now. Enjoy your weekends. We'll see you next week.